find a way to analyze how much those payments cost your institution and how much those payments are costing your account holders. When you look at that level of analysis, it gives you the opportunity to understand what technology partners you might want to bring into the mix to simplify and to digitize the payments experiences for your account holders.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Welcome, everybody, to the Wrestling Payments Podcast and the kickoff of our special FinTech Shark Week series. So I'm your host for this series, Elyssa Morgan. Over the next 5 episodes, we're going to be diving deep into the evolving world of collaboration between financial institutions and FinTechs and why it isn't just a trend, but really a critical strategy for shaping the future of financial services. And before we dive in, I did want to extend an open invitation to all of you listening. Alongside this special FinTech Shark Week series, we're launching a new focus group this June designed to bring together financial institutions, FinTechs, third-party providers, all in one space where everyone's voice is heard. And the goal is really simple: identify real opportunities, solve shared challenges, and ultimately build a playbook for successful collaboration. So whether you're a bank looking to stay ahead of the market trends, a FinTech working to understand how to better support financial institutions, or a third party playing that critical role in between, we'd love to have you at the table. So if you're interested in joining the conversation or just want to connect directly with me, feel free to reach out. Always happy to chat, because at the end of the day, staying a part of a community like this will help keep you informed, stay connected, and just make sure you're always aware of what's out there and where that next opportunity might be. So now, when it comes to FinTech partnerships, the waters can be really tough. But instead of kind of sitting on the sideline, we are jumping right into the ring to tackle the real conversations about control, risk, opportunity, and how financial institutions can really navigate these partnerships to not just kind of stay afloat, but to really lead in the industry. And throughout the series, we'll explore everything from overcoming the fear of losing control to managing third-party risk, breaking down those silos, and even how to turn these partnerships into new revenue opportunities. But today, we are starting at the very beginning of that journey, kind of this mindset shift. How do financial institutions kind of move past this fear of losing control in different aspects and start seeing FinTech partnerships as this path forward, not a threat? And to kick off the conversation, I'm really excited to be joined by Dr. Angela Murphy from Pidgin, also known as the Payments Elyssa. Angela has incredible insights into the evolving FinTech landscape and has worked closely with financial institutions navigating these changes. She works for Pidgin, who was President's Award winner last year of NEACH, and just recently was recognized again in the industry for an innovation award. So Angela, so glad to have you here. Before we jump in, would you mind introducing yourself, sharing a little bit about your work at Pidgin?
Yes, absolutely. And thank you so much for having me. Shout out to all the listeners here. Thank you so much for taking the time to listen about this topic. I think it's something that's super important. I do want to also thank NEACH for awarding us with the President's Award last year. It was such a launch pad for us as a third-party service provider and as a FinTech in the payment space. And it actually, I think, assisted us on our journey to now, just this week, announcing that we won the American Banker Innovation of the Year Award in partnership with UBB, United Bankers Bank. So I also want to highlight them and thank them for their partnership. We really are, I believe, at the forefront as a company of FinTech innovation and payments collaboration and innovation in this industry. So I'm excited to share some of my insights, lessons learned, and for those of you who are listening in, if you have any further questions about comments that I make, you want to ask a question, anything along those lines, please feel free to reach out to me on all social channels at Payments Elyssa.
Thanks so much for that, Angela. So now to kind of set the stage a little bit, this journey between financial institutions and FinTechs has been anything but, say, linear. So if we rewind a few years, it really felt like those two worlds were operating on opposite ends of this spectrum, right? So fintechs were seen as disruptors, financial institutions as the incumbents trying to hold their ground. But here today, we're seeing more collaboration than ever before. So I'd love to know from your perspective, how have you seen this relationship between financial institutions and fintechs evolve over the last few years? And were there any key moments or turning points that really marked the shift from competition to collaboration?
I've seen a lot of things in this space since I entered it. And when I first entered the payment space and the fintech space in particular, there was a lot of concern about fintechs and their relationship with financial institutions. I think that FIs had the opinion that it was a trend or that it was a fad. And we're going to be able to take care of our account holders, our customers, our members, and we don't need a third-party service provider. We don't need a third party coming into our account holder relationships. We can do this ourselves. And that has proved to be a fallacy. When you look at the rise of PayPal, Venmo, Zelle, Cash App, etc., those are fintech companies, fintech payment companies that came to the forefront of not even just the United States, but global behaviors as it relates to payments, because people were seeking services that they knew that their FI could not provide or would not provide. So in becoming more defensive, I think FIs actually did themselves a disservice because they didn't recognize where they could fail their account holders. And there's key examples of this across multiple channels. When you look at stored value in digital wallets in just the US, you're looking at $1 trillion market opportunity. And that's money that never hits a DDA. So for those of you who are listening, think about the number of applications that you have on your phone that you use to pay people in your life, your landscaper, the babysitter, anything like that. With my particular FI, I don't even have the ability to transfer that money into my account unless it's within 1 to 3 days. And it's normally on the 3-day side, which is really irritating to me. I don't have the instant functionality within my institution. And I'm also going to pick on Zelle a little bit. Please don't send them after me. But that user experience isn't great. It's expensive for FIs to implement. The user experience isn't the best. And we have opportunities to engage with fintechs and with payments fintechs specifically to provide better experiences for our account holders. If we're supposed to be the trusted advisor and we're going to be insured and we are going to be the people that tell them, we have you, we have your money, and we know what we're talking about, we have to be willing to collaborate.
No, that's great. And I think it's overlooked sometimes that it's okay to get help and to collaborate, because the future really is in partnering up. One of the biggest challenges facing community banks and credit unions right now isn't just competition. It's really that pace of change in customer expectations. So for generations, success was built on strong personal relationships, trust, and that is still important, but we're now in a completely different, ever-evolving landscape, right? Because today's customers expect convenience and speed and this seamless digital experience, because that's what they're getting everywhere else in their lives. And in this on-demand economy, it's going to drive those expectations, and it's not going to stop when it gets to financial services. So for many institutions, like you were mentioning, meeting those demands means recognizing that they simply can't do it all on their own, right? Innovation is moving fast, and fintechs are built to operate at that speed. They're constantly evolving their solutions to meet those expectations. And for financial institutions, partnering with them isn't, again, about giving up control. It's about staying in the game. And even with that understanding, there's still this hesitation, and it makes sense. I mean, there's a natural fear that by introducing fintech partners into this experience, you might lose visibility or influence over how your customers are really being served. So from your perspective, Angela, how can financial institutions kind of embrace this new reality while still keeping a pulse on customer experience? So how do they partner strategically without feeling like they're stepping too far back from the relationship that they've always been there? It's always been their foundation.
I think that's such a great question. And I get this a lot from financial institutions that I work with in my day-to-day life. And what I would say is that when you're partnering with the right company, when you're looking at a fintech that is going to be touching your customer relationships, you do need to do that evaluation of the level of distance. And while I understand that concern, a lot of what's happened in the space has been an evolution for white label solutions or just a powered by at the bottom of the screen. And when you're engaging with fintechs that have already done this, rinse, repeat, replicable, understanding the regulations, understanding the due diligence, understanding the importance of account holder relationships, those entities are out there. Those companies are out there. They don't want your customer. They don't necessarily want to take them from you. What they want is for your institution to be able to provide better tools and services to your account holders. And for those of us that have been in the space for quite some time, that ethos holds across verticals and across channels. And when you're doing an evaluation for a third-party service provider, you're probably going to know pretty quickly whether or not the ethos of that company, so their emotional understanding of your institution, your account holders, their needs is matching with what you want it to. And you have the luxury of choice, quite frankly, in the age that we're in now that we've moved beyond the lockdown, now that we have seen what customer expectations are. And I call this the Amazonification of customer expectations, right? Because like we want to order something and it gets to our door today. People are definitely bringing that into their financial services relationships. And so what I would say is that maybe we could step away or move away from the fear that we will lose the customer relationship or the closeness of the customer relationship, because if we're being honest with ourselves, that's already happened in the space. There's a reason that PayPal, Block, Square, Cash App, Venmo are as big as they are. Those fintechs, those entities do not have personal relationships with the people that are transacting with them or the businesses that are using them for transactions. They're being used as a matter of convenience, not because people necessarily think that they have a strong personal relationship with those entities. So I think that there's a unique opportunity here to grow the account holder relationship and to strengthen the account holder relationship by engaging in due diligence and engaging with partners that can augment the relationship that you've already established.
That's great. So you really can't talk fintech partnerships without acknowledging one of the biggest challenges that comes with them, and that's this fear of losing control over the risk that they bring. Anytime you're handing off parts of your operations or customer experience to a third party, it's natural to feel a bit uneasy, especially when you don't have the same hands-on control over how things are being managed behind the scenes. We just recently ran a survey, one that we're going to link here. So if anybody's interested in submitting a response, feel free to do so. But one of the top concerns respondents shared with us was exactly this. How do we effectively manage those inherent risks tied to these partnerships? And that hesitation around risk management continues to be one of the biggest barriers holding institutions back from fully embracing collaboration. It's expensive, whether it's a strain on resources, whether it's budget or staff, it's a lot. And so I don't want to dig too deep into this because we are actually going to unpack that topic in much more detail in our next episode. It really deserves a lot of focus. So we will be specifically focusing on that third-party risk management considerations. So just letting folks know if that's a conversation you're thinking about or maybe struggling with, definitely plan to join us for that one. But kind of looking ahead, it's clear that collaboration isn't just kind of a trend. Like you had mentioned, it's quickly becoming a core strategy for survival and long-term growth in financial services. We are going to continue to see consolidation across the industry. And for many community banks and credit unions, the question is really about how to remain viable and competitive in this fast-changing environment. And so that's where this collaboration plays such a critical role. It's about understanding the market you serve, identifying those new opportunities where you already have this relationship that you had mentioned. PayPal, Stripe, all they don't have, right? So whether that's relationships with consumers or businesses, and then figuring out how to kind of embed the right solutions into your offerings to meet those evolving needs, I think we're reaching a point where having a clear payment strategy along with a modernized digital and service offering isn't just important, it's going to be the differentiator, especially on, I'd say, the business side where, companies are looking for more efficiencies, faster payments, embedded finance solutions. That's going to make their operations smoother and more connected. And if you're providing it, you're adding that glue to that relationship and becoming almost indispensable to that organization. So, Angela, from your perspective, how do you see the role of collaboration kind of continuing to evolve in the future of financial services? And do you think there's any examples that you've seen in your success stories, anything like that you'd like to share on differentiated offerings?
Yeah, absolutely. So I'm going to touch a little bit on something that you just shared in terms of like the risk management side of things. For those of you who are listening to us today, I also do provide webinars and educational services either through NEACH, other educational associations, or payments associations. I also have a lot of free content that's out there that talks about risk management as well, particularly as it relates to third-party risk and then also institutional risk as it relates to your account holders. So if there are questions, concerns, things that you want to learn more about, you can either reach out to NEACH and have them connect you with me, or you can reach out to me directly. I do have a lot of material out there about this, and it is also available for accreditation. So if you are somebody who is trying to maintain an accreditation, a lot of what I am doing right now does provide some of those credits as well. So if that's of interest to you, please don't hesitate to reach out to either NEACH or to myself directly. But to the finer point of the collaboration and how I see this evolving in the financial services industry, I have seen things change so much in the last 5 to 7 years as it relates to FI and FinTech collaboration. I do think that we're in a place where there's a recognition that from a technology perspective specifically, and even a payment strategy specific perspective, that FIs don't necessarily have the resources to be all things to all account holders. And we've seen this in particular in the faster payment space with FIs that are trying to onboard either to the RTP network or to the FedNow service. It's a lift. It requires internal engagement. It requires your product team. It requires your treasury teams. It requires so many people to have buy-in, but then even once you have that buy-in, building it can be a little bit of a nightmare. We've all dealt with a roadmap issue, right? Like this is not news to anybody. And so what I've seen, particularly in the faster payments space, is the rise of third-party service providers who can provide off-the-shelf solutions that are interoperable, easily integratable, and that are future-forward solutions as well. And I see that in my day job. So I mentioned earlier, I work for Pidgin, who is a third-party service provider. We provide connectivity to financial institutions. We connect your core system to the FedNow service and to the RTP network. And we do that in a quick and dynamic way. We have seen so much success with this with our community banks, with bankers banks, corporate credit unions, even larger up to mid-market financial institutions where it's a thing that you can take off of your plate. So when you look at your institution, you look at your payment strategy, and you look at your tech stack. So kind of triangulate these three things, your institution and then your payment strategy and your tech stack. There's low-hanging fruit there that can not only optimize your revenue, but reduce your risk and improve your bottom line. At the end of the day, that's what we want as institutions. We want to increase our revenue and improve our bottom line. And working with a fintech or a third-party service provider is a great way to take that step. And because we're now, well over a decade into kind of the fintech darling partnership era, even though there's a lot of, misgivings, misinformation, things like that, There are so many fintech providers out there that have been doing this for a while. They have a large roster of clients. They've done it with a measure of success. They understand risk management and they understand the importance of maintaining the relationship between the FI and the account holder. And they're also looking ahead as well. Financial institutions, I think we sometimes struggle to be as strategic as we want to be because we're trying to put out this fire and put out that fire and trying to figure out, well, who am I supposed to partner with and how do I do an evaluation and what about the regulators? I understand that there's a lot of confusion from an FI perspective. But when you look at particularly on the business side of things, as it relates to faster payments, and I wanted to touch on that, Elyssa, because you mentioned it, I definitely see that there is a significant future in fintech and FI partnership as it relates to B2B specifically. That's where I cut my teeth. I started in B2B payments and I saw how broken it was and I couldn't believe it. How did we let things stay this way? Not only get this way, but just stay this way. And I think that the biggest revenue opportunity for financial institutions in the next 3 to 5 years is going to be creating a payment strategy. And then also a major part of that strategy being centered around treasury and commercial payments.
You had mentioned something looking ahead. I just have to say, this idea of a more collaborative future for financial services is really exciting to me. Just as like even on a personal level, like I'm just the kind of person who believes everyone can come to the party, right? So really there's room for everyone at the table. And I'd love to see, and this might be rainbows and butterflies and all that, but I'd love to see a future where community institutions, fintechs, even the largest players in the market find ways to win together, like where everybody brings their strengths. And ultimately it's the end users, the businesses that benefit the most. Now, we all know that that's easier said than done. Collaboration isn't really just about jumping into partnerships for the sake of it either. It's about having that clear strategy, right? That aligns with your institution's goals, knowing where you fit and making sure that as kind of the landscape shifts, you're not being left behind while, say, big banks or mega players, saturate the market, right? You're positioning yourself to win, and making sure that you're positioning yourself for future success as well. Like, don't just think of now, think of future. So as we look ahead, Angela, I'd love to hear your thoughts. What do you see as the biggest opportunities? I know you had mentioned treasury, B2B space. So biggest opportunities, challenges with financial institutions when it comes to collaboration with fintechs. And then, on the challenge side, how can they prepare, right? How can they prepare to navigate those challenges in a way that makes this all successful for everybody involved?
Absolutely. It's a wonderful question. And I actually want to give a little bit of a shout out to the mid-market and below friends that are potentially listening to this today. So a lot of the work that I've had the privilege to do, particularly in the last year, has been with the community banks up through the mid-market. So the smaller side of the news, as we would see it in the financial services industry and the payments industry, Main Street Bank, Main Street Credit Union, that type of a thing. And I think that there is a significant opportunity here for smaller institutions. Because you're smaller, you have a unique opportunity to punch above your weight if you innovate effectively. Now, that's a whole bunch of industry jargon, so we're going to unpack that a little bit. What does that look like for a community institution, for a mid-market institution, for somebody that is not in the top 25? It comes down to understanding the needs of your account holders and then understanding where your institution wants to be in the next 3 to 5 years. You take a look at those two things, and then my suggestion is to analyze two aspects of your business. One is payments, and there's ways that you can do that. And the second one is manual processes. And the reason that I split it out into those two things is because I have two areas of expertise. One is payments innovation, and the other one is artificial intelligence. And I'm not going to go too far into the weeds on that. I can also do a webinar or a workshop with your staff if you would like, because I know there's a lot of fear around that. I just did a webinar on it the day before yesterday. But What I would encourage you to do is with your internal teams, run an analysis on the payments behavior within your institution. How much money is going in and out for each payment rail that you're currently using? And then find a way to analyze how much those payments cost your institution and how much those payments are costing your account holders. When you look at that level of analysis, it gives you the opportunity to understand what technology partners you might want to bring into the mix to simplify and to digitize the payments experiences for your account holders. Because I'm going to be honest with you, Zelle is not going to fix it. And it certainly doesn't have strong use cases in B2B, in my personal opinion. Legal disclaimer, blah, blah, blah. Kevin and I do this all the time, the payments professor. But do that analysis. Look at where the low-hanging fruit is in your institution, and it will help you with fraud, which is something I'm really excited about. So when you look at payments behavior in your institution, and particularly as it relates to check, because I'm going to talk a little bit about the digitization of payments and moving to digital payments, I would encourage you to find the top 20% of check users in your institution that are doing 80% of your check volume, and then work on educating those entities and those people about optimizing for digital payments. So that's a huge opportunity right there. And there are service providers that will absolutely help you with that. The second piece is going to be looking at the role of artificial intelligence within your institution. Right now, in terms of fraud, fraudsters and bad actors in the industry are about a generation and a half ahead of where we are as financial institutions in terms of their behaviors and how they're targeting financial institutions. And I'll give a storytelling example. Essentially, what fraudsters have figured out is that they can target smaller institutions because they recognize that they don't have the tech stack to target, combat, work against fraudsters in particular ways. So if you're trying to get ahead of the game, look at how you can utilize artificial intelligence and third-party fintechs that are in the AI space in financial services specifically that can help protect your institution and your account holders against fraudsters. And then I would also say on the artificial intelligence topic that there is a lot of low-hanging fruit in your institution in terms of manual processes that an individual or a team of individuals does not need to do. And I'm going to push back a little bit because I can already hear some of you saying, but Angela, Elyssa, that's going to steal my job. Debbie's been with us for years. We can't have this. No. Calm down a little bit. AI is a tool. It's like an intern. It is something that you can implement that allows you to save your team's time and to save your institution money. And it also gives the opportunity for upskilling your current workforce. It is not a replacement. It is a supplement. And I really encourage you to look at it that way.
That's great, Angela. Thank you so much. So we're getting towards the end of the episode. Any final thoughts? Any key takeaways for the audience today?
I think that if you're listening to this, you're already putting one foot in the right direction. And if you are curious about FinTech partnerships, if you have questions or ideas about how technology can help solve problems within your institution, don't be afraid to reach out and ask. There are people like me, there are companies like Pidgin, there are entities like NEACH that are here to be a resource for you. There are no dumb questions. I was in academia for years, and I would have rather had somebody ask me a question than be too afraid and then get the answer wrong because they just weren't comfortable voicing what they wanted to know. So if there are questions that you have, if there are things that you wanted to know that I didn't share today or that Elyssa and I didn't talk about, reach out to us. We're here for you.
Echo that. We are here for you. If you'd like to join the conversation, you'd like to be a part of that group, I'm just going to reiterate what I said earlier today. Don't hesitate to reach out. We'd love to have you and discuss more around opportunities, challenges, and how we can kind of move forward successfully together. Tune in tomorrow for the episode on third-party risk management considerations for fintechs. and the rest of the week to explore more opportunities. Thanks, everybody. Take care.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.